Crypto. All the crypto news in one place.
Just now, $129 million in longs liquidated. Over 128 million in long positions were liquidated in the past hour alone as Bitcoin fell below $88,000. Yep. It's obviously not getting really pretty, right? Hold your assets. Bitcoin falls below $88,000. I like this picture. Actually, it's pretty good. So, weekly close is key, not bullish. Bitcoin drops below 88, short-term volatility, but long-term believers see it as a chance to accumulate. That is what I'm telling you guys. I see XRP, if we come to the daily, look at what happened. Remember this day, the 19, nice collapse that we had that we watched live. We actually watched live. And it was painful, but we're back at this. Look at this. This is 2026, everybody. January the 5th.
Now, the latest news says that 17,000 Bitcoin has hit exchanges. If this was 10, 15 years ago, well, that wouldn't be a big deal. That wouldn't even be $17,000 worth. But we are talking about millions, tens of millions of dollars in potential sales. Now, usually when a cryptocurrency hits a centralized exchange, it means that sellers are more willing to, of course, sell. Roughly 17,000 Bitcoin reportedly moved onto cryptocurrency exchanges this last week, a pattern traders watch closely for selling pressure. Bitcoin slipped as the inflow appeared, struggling to hold recent highs as short-term sellers woke up. The move lands in a market shaped by massive Bitcoin ETF demand and growing tug-of-war between long-term holders and fast money. So why do Bitcoin exchange inflows matter?
I was accused of being a bear. Like people said, you're crazy. We're going to 200, 300 plus. My buddy American Hodl, he said $1 million not out of the question. And those predictions, I think, they're all coming from a good place. We're all optimistic about the asset, but you have to be realistic about other macro forces that are in play and potentially can put a lid on the Bitcoin price action. And in the intro, I didn't mention the other thing I did think was a headwind for Bitcoin, which is rather unexpected by people this year, is the move in precious metals. I do think that gold getting moving, and it's part of what Luke's talking about. Like if you listen to Luke's podcast about this, Luke Groman's podcast, he's talked about like how, gold's performing very well. Why isn't Bitcoin? Well, there's various different factors in play that the assets are not comparable. I view them very differently as assets. But my point is, when you see a shiny moving object, pun intended, money's going to go there. There are portfolios that literally will fast money that will just chase what's moving. And that has this compounding effect. So if Bitcoin's not moving and gold, which is understood and, it's held by central banks.
We got CZ from Binance, as I mentioned, saying that 2026 is going to be a super cycle. But what does a super cycle mean? It means that demand is overwhelming new supply, which we've already seen in 2025 with what could have been a fairly lackluster price action and trend in the charts. But we saw MicroStrategy, Michael Saylor, buying billions of Bitcoin, the ETFs, massive flows, exponential institutional adoption with them stacking in, whether it be launching their own Bitcoin treasuries or stacking in as a part of their investment plan, which we can see right here. Institutions replace retail as the marginal buyer. We're already seeing that take place. Pullbacks get shallower, not deeper. We might have a bit longer periods of consolidation with these big players coming in and without the hype cycle really pushing this. But we're also starting to see Bitcoin start trading like a macro asset, not a speculative trade.
2026 will be a super cycle, according to CZ, who says the 4-year cycles worked well in the past, but everything has changed the moment institutions entered crypto. Absolutely. I think that's true, but I don't know if we're actually going to hit a super cycle. Also, when everybody knows a pattern, it stops working. So the pattern now is Wall Street's pattern. That pattern will be manipulation to its finest because, BlackRock is the ultimate manipulator. And you also had, once the crypto bros that kind of ran the show, they got all liquidated on the 10th of October. So that pretty much was like Wall Street's signal to the crypto space, hey, we're in control now. don't even mess with us. So that's what people wanted. I didn't want that. Many people did. As you know, you guys probably didn't want that either. But that's what we got now. With that said, search interest in cryptocurrencies down to its lowest point in nearly 2 years. Look at this chart right here. This is the brilliance of Wall Street. They know how to mess with people's heads and to distract people. They are the ultimate distractors.
Michael Saylor is saying that he's going to buy more Bitcoin. Like I've been saying, I wish that he would stop buying Bitcoin at this point. He's holding up the market right now, essentially by himself. Let the market go down, and then we can buy at lower prices. He can buy at lower prices and actually have bigger effect of his US dollars, running it towards the upside when sentiment is better. So he's not listening to me. I don't know. Maybe you all guys can spam him to listen to me. Jokes aside, this massive insider whale is taking some action. He is adding more margin as the losses have been incredible here. $66 million during the massive drop here when altcoins, also essentially Ethereum, went down to 2,776. The losses were probably like $100 million. I don't know. But yeah, he's adding more margin. He's still convinced that we're going to go up higher.
We have shocking events happening in Japan right now. We also have the Japanese bonds going absolutely insane as well. So we should see Japan the first one to collapse, causing a domino effect, collapsing the rest of the economies, right? So a lot of crazy things going on in Japan right now. And on top of that, we have Japan also adopting XRP. We have SBI adopting the RLUSD in Q1 as well, and we have Japan set to recognize XRP as a regulated financial asset. So Japan plans to classify XRP as a regulated financial product under its updated crypto law, signaling tighter oversights and clearer rules for digital assets. So overall, Asia loves XRP. This includes Japan and Korea. Now we do have XRP also currently dominating Japan's cash inflows, and a new 20% tax rate is about to lock that advantage in. So we have Japan's crypto tax going from 55 to 20%, which will incentivize even more investors to invest into the crypto markets. We're about to see a lot of Japanese liquidity flowing into the crypto space.
Now I want to talk a little bit about Brian Armstrong, CEO of Coinbase, was just at Davos, and he had some interesting takes here on what he heard at Davos. Just wrapped up our week in Davos. I don't love wearing a suit every day, but sometimes it has to be done. Truth be told, just me, I don't own even one. Oh, actually, I have one suit for my wedding. That's it. Here where I live, it's really not, nobody goes in a suit, only like politicians and lawyers. That's it. I know in the US it's very normal to have suits, but here no, it's too hot. Davos is a unique place. World leaders and CEOs and lots of crypto companies all come together in a small mountain town in Switzerland for a few days. It's productive time to connect one-to-one with everyone in the location.
She's the CEO of Stellar. I played it in a few other videos, but it's very important to what we're talking about here and how important blockchain was to the conversation at Davos. It was one of the most talked about subjects outside of AI. Let me play it.
I'm fresh off the plane from Davos, and before I get too far away from my time there, I wanted to make sure and give you my 4 takeaways from Davos 2026. Davos had every large corporation, bank, and every finance giant. And it is clear that financial services are the killer use case for blockchain technology. And maybe even more importantly, what's also clear, the true winner in Davos this year was digital assets. It was talked about across the board, the usefulness of digital assets, how they can make not just the businesses move more seamlessly, but how they can benefit the retail side and the SME side. So it was really great to see that this has now just become mainstream conversation about how digital assets can play such a role in this killer use case for financial services. There's a recognition that the tech is here, but there's still a gap for traditional finance on how to integrate it and what are the real risks associated with it.
This would result in more adoption of these crypto cards, more adoption of the stablecoins they support, and thus bigger profits for the issuers. And can you guess who's been pushing back against allowing yield on stablecoins? That's right, the big banks. Officially, it's because it could destabilize the financial system, since most people would opt to, say, use a crypto card instead of a card issued by, say, JP Morgan, draining bank reserves and increasing financial instability. Unofficially, though, it's because they don't want competition, which would naturally lower their profits. Thankfully, though, there are other ways that stablecoins can earn yield, and one of these is DeFi lending. Believe it or not, but you can currently earn around 3.5% lending USDC on Coinbase, which is presumably the maximum you could earn if stablecoin issuers were allowed to pass on reserve yields to holders. The difference with DeFi lending, though, is that the yield is much more variable and depends on market conditions.
When we think about what's really going on, we know that public blockchain integration in the banking system is happening through tokenization. Tokenization is such a crucial piece of the puzzle because it enables everything on chain. When we start to hear the talks about every US market is moving on chain or every single asset is moving on chain, what that really is telling you is that this is the new system. We have here, while the financial world is eager to embrace the promise of public blockchain technology, some in the regulatory community believe that it represents a unique risk. And although, yes, there is definitely risk to it, the main thing that we are looking at here is that clarity is becoming a reality. So that is, completely removing all of the risk tied to this. So then we look at the adoption phase.
Watch the whole video, but whether liquidity is about to be drained or not, we better get the Clarity Act before Friday, because this brings us to event number 4 that affects crypto this week. The Clarity Act will be a huge catalyst, but not if the government gets shut down and this doesn't get a chance to pass again.
The regulation situation, the Senate Banking Committee at the 11th hour said, we're not going to deal with the Clarity Act right now. Coinbase weighed in, said they don't like it. There's still the opportunity for this legislation to be rejiggered. And would that be the next opportunity as a catalyst?
What's funny is the regulation is actually more helpful to Wall Street than it is to the crypto industry. The crypto industry has gone from nothing to trillions and trillions of dollars of value.
Number 5, the next government shutdown is happening beginning on Friday, 75% chance.
2 months after the longest government shutdown in U.S. history, lawmakers have less than 2 weeks to prevent another one.
We have a January 30 deadline to fund the remainder of the federal government.
And because of the debate with ICE funding, it doesn't look like the Democrats and Republicans are going to come to an agreement, sending us, the government, into a national outage.
Congress reached agreements to fund some agencies through the end of the fiscal year, but lawmakers are still working on legislation to fund others.
Taxpayer dollars are being used by the Department of Homeland Security and ICE.
Well, I don't think the Fed is going to do anything. I think they have put themselves in a timeout akin to what they did about a year ago when they halted, at least temporarily, the easing cycle. I think that's the best bet. But it wouldn't surprise me to see dissents again, possibly in both directions. That's what we saw at the last meeting. And what we're also seeing, which is not going to come in the January FOMC meeting, but every other meeting we get the updated so-called dots plots. They estimate by all the members as to where they think the Fed funds rate is going to be, the summary of economic projections. And what we're seeing there is just a wider range of expectations.
Now, also, in addition to all this, what about US? US-based stuff, well, we have a lot of it. FOMC meeting this Wednesday, okay? Even though, if you look at the percentages, right now there is basically no chance of a rate cut. But of course, whenever there's a FOMC decision or press conference, people are worried. Wall Street's worried. They want to know what Powell is going to say for the next event, right? And of course, there's a lot of controversy over Powell right now because he's being investigated by Department of Justice. And a lot of people don't like that. A lot of Fed chairs, previous ex-Fed chairs, and also central bankers, or the heads of them, are coming out and saying, no, the White House should not intimidate and should not do this to Powell. So, a lot of question, a lot of eyes is on Powell.
Silver just exploded past $110 an ounce on the Shanghai exchange. China's facing an historic shortage of silver. Gold is at all-time highs, nearly $5,000 an ounce. And copper was up 40% in 2025 and is poised to explode higher in 2026. This is every asset exploding at the same time. And reports confirm Jerome Powell and the Fed are intervening into markets. They are prepared to back Japan's yen at all costs. They will even sell dollars in order to buy the yen to make this happen. We saw this happen in 1998 in the Asian financial crisis, and when it happened, the dollar was devalued by over 50%. Equities ran and hard assets ran. This is what currency collapse looks like in real time. This is why we've seen silver move from a $4 trillion asset to a $6 trillion asset in a month. But unlike silver and gold, Bitcoin is the only asset that cannot be debased. And Bitcoin is going to have its gold and silver moment. Bitcoin is going to flip gold and silver.
So look, a possible double bottom on the weekly. It looks like we dug in right to previous support or a little lower than before. Not sure here. Wonder what's happening there. There we go. Yeah, so look, I mean, it's interesting, right? I mean, it's a little lower, but it looks like a double bottom, right? Let's take a look at that weekly. What a nasty weekly candle. Horrible. We opened at 93,672. The high was 93,672. We opened right there, like no wick, no, low was 86,000. And the close was 86,673. Down $6,999 on the week. It was a $7,000 loss for Bitcoin. We took a pummeling to the downside. Horrible. Absolute nasty. Can we come back from this, or is this the end? Is this the bear flag on the weekly that finally said, sayonara, senorita? We're on the way to the downside, and it doesn't look amazing. I'll tell you that. And even here on the weekly, I've seen this before. An eerie little playbook, but that's a tiny little shoulder that could be.
All right, let's kick it off with Bitcoin. Bitcoin currently trading at $87,000, so it continues to move lower. However, it's still holding the higher highs and higher lows. But, we've been following the Bitcoin Wyckoff accumulation model highlighted by Marty Party on X, which I've been sharing over the past 3 weeks. So it's like it's playing out there, and it looks like it's a double bottom forming where it's retesting maybe that $78,000 support level. Obviously not guaranteed. It just looks like it's playing out that way. But again, when you look at the chart, still higher highs and higher lows. But we're going to have to be patient and let the market show us what it wants to do here, because it could break through certain support levels and invalidate this thesis. Now, one good sign is that as Bitcoin is moving lower here, it is certainly approaching the oversold zone, the RSI on the daily chart approaching about 30 here.
So let's get straight into it, guys. And what we can see right now for Bitcoin is that we have indeed lost the level here at $88,300. You can see we were supported off my orange line 4 times in a row here, but now we have lost it. So I continue to tell you to be cautious in the short term, and especially now when we have lost this level, I'm telling you, remain cautious in the short term. And I believe still that we're going to go up for Bitcoin throughout the end of this year. However, for the time being, until we break above all of the key levels of resistance, we still need to be cautious. So right now, on the balance of probabilities, we can still go sideways for a bit here, but now the $81,692 level, basically tagging the previous swing low here on the wick, this comes into play. So we need to be cautious, guys, in the short term.
So, did you enjoy the zap? Let me know in the comments.